Have you ever wondered why you have a perfect strategy, yet your account keeps bleeding red? You sit there, staring at the screen, telling yourself, I won't do it this time, but 5 minutes later, you're clicking buy or sell, driven by nothing but pure, unadulterated fear. It's the ultimate paradox of the financial markets. You know what you should do, yet you find yourself doing the exact opposite. Why is that? It's not your strategy. It's your mind. You have the technical analysis down to a science, you can identify a breakout pattern from a mile away, and your support and resistance levels are plotted with surgical precision. Yet, the P&L remains in the red. This phenomenon is what psychologists call the intention-action gap. It is the chasm between what your logical, prefrontal cortex knows is correct and what your limbic system demands in the heat of the moment. Let's start with the hard truth. Traders don't follow their plans because they are wired to seek instant gratification. Your brain is a survival machine, not a trading machine. Evolution has spent millions of years training your nervous system to prioritize immediate rewards and flee from immediate threats. When you see a candle moving, your primal brain screams, get in now or miss out. It's the fear of missing out, or FOMO. This is not a failure of intelligence, it is a failure of biological software. You have a plan written on paper, signed and highlighted, but in the heat of the moment, your amygdala takes over. The amygdala is the ancient part of your brain responsible for the fight or flight response. It doesn't care about your risk-reward ratio or your stop-loss placement, it only cares about the perceived danger of missing a move or the perceived pleasure of catching a quick spike. You abandon logic for emotional relief. You're not trading the market, you're trading your own nervous system. To break this, you must treat your trading plan like a legal contract, not a suggestion. A contract requires strict adherence. If you violate it, there are consequences. If you don't treat your plan with that level of gravity, you are merely hoping for a result rather than executing a process. Creating disciplinary operations is the next hurdle. Most people think discipline is about willpower. It's not. It's about environment design. If you have to fight your urges every single day, you've already lost the war of attrition. You need to build a system where the right action is the easiest action. Think of this like a dieter trying to avoid junk food. If you keep cookies on the counter, you will eventually eat them. If you don't buy the cookies in the first place, you don't have to exercise willpower. Start by limiting your screens. Stop watching every tick. If your strategy is based on the 15-minute chart, why are you looking at the 1-minute chart? You're creating noise that triggers your impulses. Every tick is a mini temptation. If you watch the price jump up and down, your brain will subconsciously look for patterns that don't exist, leading to analysis paralysis or, worse, impulse entry. Discipline is simply the removal of temptation. Hide your balance, turn off the P&L ticker, and focus entirely on the execution of the setup. When you remove the visual feedback of your profit or loss, you remove the emotional weight of the trade itself. Then comes the silent killer, increasing your lot size emotionally. You lose a trade, and suddenly, you feel the need to get it back. You double your position size. You tell yourself, I just need one good winner to recover these losses. You think you're being bold, you're actually being a gambler. This is the exact moment your professional career ends and your gambling addiction begins. When you increase your risk after a loss, you're telling the market you don't respect your own rules. You're trading from a place of desperation, and the market can smell desperation like a shark smells blood in the water. A professional trader increases size only when the setup is perfect, never to recover a loss. Think of a professional poker player, they don't bet more money just because they lost the last hand. They bet based on the probability of the cards they are holding. If you are increasing your size to make it back, you have shifted your focus from probability to vengeance. Vengeance against the market is the most expensive hobby in the world. This is the core difference between a trader and a gambler. A gambler plays for the thrill, for the high of winning, and for the hope of a miracle. A gambler treats the market as an extension of the casino floor, looking for that lucky streak or that gut feeling. A trader plays for the edge. They understand that one trade doesn't define their career. They view the market through the lens of statistics and expectancy. A trader knows that the outcome of any single trade is essentially random, but a series of trades, executed with an edge, creates profit. If you find yourself praying for a trade to work, you're not a trader. You're a gambler at a casino. Prayer is for religion, not for market participation. When you pray, you are admitting that you have no control and no edge. You are hoping for a miracle because your analysis has failed you. If you don't have an edge that you trust, you have no business risking your capital. To stop trading by impulse, you must implement a pause button. Before you enter, ask yourself, does this meet every single condition of my plan? If there is even one doubt, you do not pull the trigger. Impulse is a physical sensation. You feel it in your chest, your heart rate spikes, your palms might get sweaty. When you feel that, stand up. Walk away from the screen. Go drink a glass of water. Take a walk around the block. The market will be there tomorrow. Your capital, however, might not be. This physical disconnection is crucial. By moving your body, you shift your brain out of the amygdala-driven state and back into the logical, prefrontal cortex state. It is impossible to make a high-quality trading decision while your heart is racing and your breath is shallow. By forcing a pause, you are effectively giving your nervous system time to reset. Simple rules change results. Stop trying to find the Holy Grail indicator. The internet is full of magic scripts and proprietary algorithms promising 99% accuracy. They are all distractions. The best traders in the world use simple trendlines and support and resistance. They win because they follow their rules with religious consistency. Your rule should be simple: I will only trade when X, Y, and Z happen. If they don't, I do nothing. Nothing is a position. Sometimes, the most profitable trade is the one you didn't take. By sitting on your hands during choppy, low volume, or unpredictable market conditions, you are actively protecting your capital. Most traders think they need to be active to be profitable. They feel that if they aren't clicking the mouse, they aren't working. This is a fallacy. In the professional world, waiting for the perfect opportunity is the work. Consistency isn't about winning every day. It's about executing your process every day, regardless of the outcome. You can lose 5 trades in a row and still be consistent if you followed your plan for all 5. Consistency is the byproduct of discipline. It's a state of mind where you no longer care about the money in the trade, but rather, the quality of your execution. Imagine a high-performance athlete. They don't change their training regimen just because they lost one game. They trust the process that got them there. When you detach from the money starts to flow. It sounds counterintuitive, but the moment you stop obsessing over the dollar amount of your P&L and start obsessing over the perfection of your entry and exit, your results will naturally improve. The money is just the scoreboard, the game is the process. Developing patience is a skill you must practice. Most traders are bored, so they trade. They view the market as entertainment. They need the dopamine hit that comes from the flashing numbers. You need to view the market as a waiting room. You are a sniper, not a machine gunner. A machine gunner sprays bullets everywhere, hoping to hit something. A sniper waits for the target to walk into their crosshairs, breathes, and takes one singular, calculated shot. If the prey doesn't show up, you go home empty-handed. That's patience. That's the mark of a master. A master trader knows that the market offers up high-quality setups only a few times a week. Everything else is just noise designed to trap the impatient. There is immense power in trading less. Overtrading is the fastest way to drain an account. By trading less, you filter out the low-probability setups. You save your mental energy for the moments that truly matter. Less trading equals less stress, less commission, and more clarity. You aren't getting paid by the trade, you're getting paid by the edge. Every trade you take adds a layer of tax on your mental capacity. If you take 20 trades a day, by trade number 15, your decision-making capability is significantly degraded. You are suffering from decision fatigue. By limiting your activity, you ensure that every single trade you take is backed by 100% of your focus and analytical power. Finally, you need a professional routine. You treat this like a business because it is a business. You have a pre-market routine, a during-market routine, and a post-market review. You log every trade. You analyze your mistakes. You don't skip days because you're not feeling it. You show up, you prepare, you execute, and you review. This is how you build a career that lasts. You are the architect of your own success. Stop blaming the brokers, the news, or the whales. The market is indifferent to your struggle. It does not care if you have a family to feed or a mortgage to pay. It only cares about the orders you put into the ledger. Look in the mirror. Master your psychology or the market will master you. You have the tools, you have the knowledge, and now you have the understanding of why you keep failing. The final step is simply to decide that you are done being a spectator in your own life and start being a professional in your own craft. Discipline is the bridge between goals and accomplishment. Build that bridge today, one trade at a time, and never look back. The path of the professional trader is paved with patience, silence, and the unwavering commitment to a process that transcends the chaos of the market.